So you have some money saved and you're looking to invest in the stock market. Whether you want to do it because you want to increase your wealth or you simply want to take your investing game to the next level so that you can achieve the financial freedom that you desire, it is really important to invest in companies that are high quality. And what does a high quality company mean? In simple terms, it means a company that has a really good future, but at the same time, a solid present, and that needs to be backed up by a solid financial position. One of the best ways to assess this is to analyze the company's balance sheet. Hello everyone, my name is Guillermo, and in this video I'm gonna share with you how it is that you can analyze a balance sheet like a real professional so that you can use those insights to make great investment decisions. And just for some background, I've analyzed over $1 billion worth of real estate deals working at one of Canada's largest real estate investment trusts. In real estate and the stock market, is really important to look at a company's balance sheet or a property's balance sheet, so that way you can decide whether or not something is a worthwhile investment. And in this video, I want to share all the different tactics that I use to analyze the balance sheet of a company and use that information to make a good investment decision. And if you stay until the end of the video, I'm also going to share with you how it is that you can automate part of this process, so that way you can look at more companies faster and find better investment opportunities faster as well. Okay, so in order to analyze a company's balance sheet, the first step is to be able to get the balance sheet in the first place. And this is where I'm going to give you the first tip or the first secret. If you go to a common site like Yahoo Finance, you can go and type in the company name, of course, in the search, and then click on financials. You will see some information here on an annual and quarterly basis. So let's say that we want to look at the annual basis. What you can do intuitively is to just go ahead and copy this information, put it into your spreadsheet so that you can perform all the different calculations, ratios, and analysis that I'm going to share with you in this video. But as you can see, here's the problem. You do this, you're gonna get a whole bunch of data, all of it organized in the wrong way, and it's gonna be very hard to be able to work with this data. So what's even better than to be able to get the data like this is to use a tool like I'm gonna show you. So this is an extension for Excel and Google Sheets. It works exactly the same on both platforms. And here you can just type in the company ticker or the company name. So in this case, we have Apple, and then you can click whether you want annual, quarterly data. And this is a key thing. You can select standardized financials or SEC as reported financials, which is exactly how the company reported to the SEC. To keep things simple, we're gonna use the standardized financials. This is kind of the same data that you would find on a site like Yahoo Finance, and then you can simply click on get data. Now with this information ready to go on your spreadsheet, now we're gonna get into how it is that step by step you can analyze a company's balance sheet. The first step to analyze a company's balance sheet is to understand the structure of the balance sheet. And the good thing is that the structure of a balance sheet is really simple. Let me explain it to you. So in this case, we're looking at the balance sheet for Apple, and you can see we have a whole bunch of different line items. That's what they're called. And then we have the respective values for each of these line items. And in this case, you can see that we have this information on a historical basis, which goes back all the way to 2004. So the way that the balance sheet is structured is in the following way. So if I zoom out, you can see the whole thing. And I want to just share with you the rough structure. So first, you have the assets of a company. So the assets go all the way from here all the way to this part of the balance sheet. So in this case, you can see all the different assets are highlighted. And then on the other hand, we have the liabilities of a company. I can highlight those as well. You can see them right now on the screen. And the equation of the balance sheet is very simple. You take the total assets of a company, you can see this number right here, minus the total liabilities of a company, and that gives you what the total stockholders' equity. Think about this number like this. If I take everything that I own and subtract everything that I owe, that gives me what I really have, what I'm entitled to. And in this case, that number is the total stockholders' equity. So the balance sheet at any given period of time tells you, as a shareholder, what are you technically entitled to? Like if the company were to sell off right now and the sell would only take into account all the things that the company owns and all the things that the company owes, what would you get as a shareholder? This is really important to know, because if you're investing in a bad company, what will often happen is that you realize that you invest in that company, and if something goes wrong, the company doesn't have a good financial balance sheet, then as a shareholder you're gonna be left with nothing, which is obviously something that you definitely want to avoid. So this is why it's very important to understand the structure, and there's another structure inside this structure. Now that sounds a little bit complicated, so let me explain it to you in simple terms. Within these assets right here, there are assets that you can turn into cash faster. Those are known as the current assets, and this is what you can see right here. Assets that are harder to sell off and turn into cash are known as non-current assets. So as you can see, cash is obviously very liquid because it's already cash. Short-term investments, this may be like something like a stock or something like that you could easily sell off. That's pretty liquid as well. Same with this other different line items over here. Now things like property, plant, and equipment, if you're trying to sell an entire manufacturing plant, good luck selling that fast and turning that into cash. This is why this is a non-current asset. And you can see the different types of non-current assets that you can have. And for the liability side of the balance sheet, the same concept applies. You have your current liabilities that you need to pay off within a relatively short period of time. And then on the other hand, you have your non-current liabilities, which is kind of like longer term debt that you still owe, but you have a little bit more time to pay that off. Now what I want to do is share with you the first technique or the first secret of analyzing a company's balance sheet, and that is to perform what is known as horizontal analysis. Horizontal analysis is really powerful, and this is something that I highly recommend that you learn because it applies to the balance sheet, which we're looking at right now. It also applies to the income statement and of course the cash flow statement as well. So let me explain to you how that works. When you think about something horizontally, what do you think? You think of the horizon, which is in this shape like this. Vertical analysis, on the other hand, is the opposite. It's a shape like this. So starting off with horizontal analysis, because I'm also going to share with you how you perform vertical analysis. What you do is you look at the change of a particular line item that you're interested in over a period of time. So this is why it's really helpful if you have historical data like this, because you can see all of the data and how it has changed over time. And in order to perform this type of analysis, it is really important to understand the formula that is known as the percentage change formula. For this, what you do is, let's say that we want to analyze the total current assets of Apple in this case. We could also analyze the cash and equivalents or any line item that you can see right here. All we need to do is, I'm just going to create a new column right here so we have some extra space, and then we need to perform the percentage change formula. So that formula is very simple. You do equals, select the latest value, which this is the most current value for Apple on an annual basis. And by the way, everything that I'm going to share with you works for an annual basis and a quarterly basis of a company. Then you subtract the previous value, which you can see right here. So we take the difference between these two numbers and then we divide it by the previous value. Altogether, this is going to give us the percentage change from one year to another. So in this case, you can see that the total current assets for Apple went from 134 billion to 135. Because that's such a huge number, this represents only a change of 0.42%. We could also drag this formula across and you can see that this calculation is performed for the previous years as well. And this is really helpful because now you get a good sense and a good indication of how a particular line item has changed over time. Something that really stands out in this case is the fact that there's a change of negative 11.73%, which is something worth looking into. But see, this is something that you would only find out once you perform this type of analysis. analysis. The same thing that I'm doing here on the asset side can also be performed on the liability side, except that generally what you want to see is less liabilities. However, obviously, like as a company grows, there's bigger assets, so there's going to be also more liabilities as well. And for that, you can use something like vertical analysis that I'm going to show you next. But generally, you can perform this kind of calculation to, for example, the current liabilities or any other line item. And what you want to see in general is the assets grow over time and the liabilities decrease over time as well. Now let's get into vertical analysis, and this is something that I already alluded to, but let me show you step by step how this works. So vertical analysis works like this versus horizontal analysis that works like this. So what are we going to do? We're going to add a column right here so that we can perform this type of analysis and have the space that we need. And in order to perform this type of analysis, you take every line item or one particular line item and you divide it and calculate it as a percentage of the total assets. So let's say that we want to analyze this line item. All we need to do is do equals this divided by the total assets of the company. And I'm going to lock this in so that way we could perform this division like this, and then drag it across so that way we get the answer for all the different line items. So as you can see, this is now taking this, dividing it by the total assets. And this is really helpful because total assets is a really important number. As I mentioned before, total assets is like everything that the company owns, everything that can provide a financial benefit to the company. So if you can see the breakdown of each of those items for a particular company, this is really helpful because all of a sudden you can see, okay, out of everything that the company owns, about 7% is cash. About another 7% is short-term investments. Inventory represents only 1.5% basically. And you can do this for every line item that you want. On the liability side, you can also apply the same equation. So you take the account payables divided by the total assets. Again, you can lock this in, so you could drag the formula. So we're going to perform this at a couple decimal places, drag it, and you can see how the calculation works. Now this is something really powerful, and really pay attention to this because this is where it gets really interesting. What you can do is combine both horizontal and vertical analysis. Yes, that's right, you can perform this. The way that you can do this is you just adjust the formula right here. So make sure that we're getting the right data. So in this case, I just need to change the total assets, perform the calculation the same way as before. And now what you can see is you can see the vertical analysis part, and you can see how this has changed over time. So before, the year before, cash and cash equivalents were about 10%, now about 7%. And you can perform this type of analysis for any line item, as I mentioned before, and for as many years as you like as well. Now, once you perform this type of analysis, it is really important to put your own analysis and your own thoughts into this. So for example, when you're analyzing a company like Apple, you may look at these numbers and see, you know what, this could be an actual good thing because now the company has less cash because perhaps some of that cash was used to fund new property, plant, and equipment, or new research and development initiatives that are going to generate a lot of value for the company. This is where you really have to use your knowledge and your own judgment to analyze how and why these numbers have fluctuated or changed over time. Now, the last type of balance sheet analysis technique that we're gonna use, and this is a really powerful technique, is to do ratio analysis. So what ratio analysis means is basically you take certain values of the balance sheet as well as some of the other financial statements, you perform some calculations, and those calculations tell you some very specific things about the company. So just to give you an example, we have the ROE, which is a profitability ratio, and the way that you calculate it is by taking, in this case, you will see right here, you take the company's net income and then you divide that by the company's total stockholders equity, and that basically gives you the return on equity, or basically in simple terms, how much money the company is generating for the company's shareholders. So with these ratios, you can really get a good picture of how certain things about the company are working. So for example, we have all kinds of different ratios that you can analyze. So we have efficiency ratios. These ratios tell you how efficient a company is at managing different things. In this case, we have the inventory turnover ratio, receivables turnover, payables turnover. We have many different videos on our channel that you can check out on some of these ratios that you can see right here. Then we have liquidity ratios. These ratios tell you how much liquidity, how liquid is the company, how much cash does the company have to cover its current liabilities. For that, we have these ratios, which are really important. Then we have solvency ratio. This basically means how ready is the company to pay its debt obligations in case something goes wrong. So these are really important, especially if you want to invest in solid companies that are going to be able to withstand different financial conditions and situations. And then we have profitability ratios, which tells you how efficient is the company at generating profit. So with this information, what is really powerful is when you take a whole bunch of companies in a similar industry, and you can take as many companies as you like using the technique that I'm about to show you and calculate these ratios, so that way you can compare them and see which companies are better off and which companies perhaps is a really good opportunity for you to invest in. For that, what you can do is use the Y-sheet screener, which you can access right here. Select the companies right here. It is also worth mentioning that you can also obviously go ahead and copy paste the data from different sources. However, this is time consuming and it doesn't allow you to see some of this information in real time. In this case, we select the companies, we select the ratios that we want to get, click here, and now all we need to do is click on Get Data. Once you click on Get Data, automatically you're going to get all the information, and now you can go ahead and start doing any analysis that you want. So for example, sort the companies and see like which companies are generating the most profit, so the highest return on equity. You can just apply a filter like this and then sort the companies in this manner. You can also look to see, okay, which companies have the highest debt to equity ratio, so you can also sort this, or the lowest. And as you can imagine, this is really powerful, so that way you can look at many different companies at once, do this kind of analysis, and then what I highly recommend that you do is that you go in depth, set up a template, and use the techniques that I show you of horizontal and vertical analysis, so that you can be really confident once you make an investment decision. And obviously this also assumes that you're going to perform some other type of analysis like industry analysis, reading the company's reports, etc. But with this techniques, you have all the most powerful tools and tactics at your disposal to make those great investment decisions. Well guys, now you know all my different secrets on how it is that you can analyze a company's balance sheet effectively, and this applies even beyond just stocks, but even in your business or a particular business that you're looking to invest in, this information is universal. So be sure to use this information so that you can make some great investment decisions for yourself, for your family, for those people that you most care about. And of course, let me know in the comments how it goes. If you've enjoyed this video, make sure to subscribe and turn on the notifications on, so that way you get notified every time we release a new video like this that's going to revolutionize the way that you look at finance and your investment results.